NPV is a positive figure, plus figure. Therefore, we can accept this project. We can go ahead with this project because it generates positive cash flows in the future. So here we are considering about the whole project. We are considering about the whole project for 5 years. So at the end of 5 years, we can generate this much. This NPV technique we consider as a technique which will focus on shareholder wealth maximization, right? So if you say profits, it's not directly relevant with the shareholder wealth maximization because we say profits can be easily manipulated, right? They can be easily manipulated with with different accounting estimates, with different assumptions, right? But here they are pure cash flows, right? They are pure cash flows. No manipulations can be done. They are cash always. Therefore, this technique we say it focuses on shareholder wealth maximization. And most importantly, it considers about the time value of money. We are discounting all the cash flows, which means we are considering the time value of money. And as I said, this technique is more focused on cash flows, right? Not the profit. So it cannot be manipulated, as well as it is not that much subjective. Profits are subjective, but cash flows are always objective.